Well, before digital platforms, many intermediaries like microfinance institutions, NGOs, business groups, they try to address these gaps. There have been a lot of services that they've created. However, their impact was often limited by the need for, in many cases, physical infrastructure, very high operational costs, and reliance on many traditional or generally accepted credit scoring methods or social ties in the case of microfinance in lieu of collateral requirements.
Welcome to The Ripple Effect, the podcast that takes you on a journey through the minds of Wharton faculty. I'm your host, Dan Loney, and in each episode, we'll be diving deep into the inspiration behind the groundbreaking research that Wharton professors have conducted and exploring how their findings resonate with the world today. Well, when you speak of innovation, especially in the areas of banking or finance, you have to think about what can be done to bring those with less access more on level with other segments of the population. And with more banking being done through digital platforms, are those platforms opening doors that have been long closed to the underbanked? Pleasure to be joined right now by Valentina Assenova, who's an assistant professor of management here at the Wharton School. Valentina, great to talk to you again. How are you?
Doing well, Dan. Great to talk to you as well.
This is obviously a very interesting area. What was it that drew your attention to it in the first place?
Well, this is a topic that's garnered a lot of interest globally in terms of financial inclusion, but I've been long interested in the challenges posed by institutional voids. So things like the lack of physical banking infrastructure, lack of roads, lack of, in some cases, bank branches in emerging economies, where these formal institutions, when they're not present, they can limit access to essential services like finance. And mobile money platforms stood out as a fascinating phenomenon, especially in many emerging and developing regions like sub-Saharan Africa, where traditional banking infrastructure can be very sparse. So in addition to that, my doctoral student, Aparajita Agrawal, who is now an incoming professor at INSEAD, has a deep-seated interest in digital platforms, and particularly in emerging economies. So what intrigued us most was how these platforms seem to be doing more than facilitating payments. They were enabling financial inclusion for millions of previously unbanked individuals. And this raised an important question. Could these platforms be filling these institutional voids in ways that go beyond what traditional intermediaries have been able to achieve?
But obviously, it seems like there is an element where it is filling in some gaps, especially, I guess, to a degree, how digital has kind of overtaken many of our lives in general.
Yes, absolutely. And particularly what sets digital platforms apart is their ability to leverage unique mechanisms that can now reach many more customers. And these are in our study, we identified database certification, unified access to distributed services, and also scaling through network effects, a really prominent and important aspect of these digital platforms. And what's interesting is that these platforms don't just connect the users, they also actively create a lot of value by aggregating data, enabling financial services through various partnerships that they have with various financial institutions, and also scaling rapidly to these underserved populations.
So how do you go about doing research in this particular instance?
Well, that's a great question. And our approach was a mix of both quantitative and qualitative methods. And in our case, we used a difference in difference design, which is a way of essentially evaluating how changes in our example, some reforms catalyzed these changes in the ability of platforms to serve more intermediaries. So we used the design to analyze regulatory changes in 78 countries that allowed non-banks, these are organizations such as telecom companies, fintech startups, to launch mobile money platforms. And this was combined with a lot of data from the World Bank's Global Fintechs database, which covers over 151,000 individuals and their financial access. So to complement this, we conducted some interviews with industry insiders at some of the leading mobile money platforms. And we also analyzed secondary sources like company reports and white papers. And this mixed methods approach allowed us to quantify the impact of mobile money platforms while understanding the mechanisms that were driving these outcomes.
So when you have the different regulatory landscapes in certain areas, I assume that it may help some of these non-banks help them to operate in this space and to provide some better opportunity.
Yes, absolutely. The regulatory reforms have been essential in creating this dynamic. And in several countries that we observed, central banks allow these non-banks to issue e-money and operate mobile money platforms. So these changes have significantly reduced the entry barriers and fostered innovation to address the unmet demand for financial services. So, for instance, partnerships between non-banks and formal financial institutions like banks have enabled new credit products and services, and they've been able to reach populations that traditional banks could not serve on their own.
Is this something that's primarily happening in lower income parts of the world?
Well, the impact is particularly pronounced in lower income regions, especially in sub Saharan Africa and parts of South Asia, but it's not unique to those regions. What's special for those regions is that these areas have often faced severe institutional voids, and there's been a lack of credit infrastructure and physical bank branches. And for those reasons, that is where there's been a great unmet demand for financial services. Our research found that mobile money platforms can significantly increase access to credit in these regions, especially among individuals who have not historically had great access to credit, like women, low income individuals, and those with limited education.
What had been the path to fill in these gaps prior to the rush of digital kind of coming into the landscape?
Well, before digital platforms, many intermediaries like microfinance institutions, NGOs, business groups, they try to address these gaps. There have been a lot of services that they've created. However, their impact was often limited by the need for, in many cases, physical infrastructure, very high operational costs, and reliance on many traditional or generally accepted credit scoring methods or social ties in the case of microfinance in lieu of collateral requirements. So these digital platforms disrupted this model by leveraging data and technology, data from sources like SMS, text messages, making financial services more accessible and far more scalable.
And so, like with a lot of things in the world, now that we have digital, I'm guessing the accumulation of information becomes one of the bigger benefits here.
Absolutely. So digital platforms generate and analyze vast amounts of data. These are from transaction histories on mobile usage patterns, and all of that data has not been historically used to certify or to establish creditworthiness. These data can now serve as a proxy for that traditional creditworthiness measures, allowing platforms to certify users who lacked credit histories, or in some cases, in countries where it's very difficult to establish those credit histories. So it's been a real game changer for financial inclusion because it allows the barriers for individuals to access loans. It lowers the barriers for individuals to access loans and other financial services.
So, by having this impact in some of these lower income parts of the world, how then does this shift in terms of the use of digital platforms impact other parts of the world?
These platforms have the potential to bridge significant gaps in financial access across the globe, and by no means are they constrained to just these emerging economies. So, for example, they enable rural populations to save, borrow, and transact without needing a physical banking branch. As these platforms expand, they can also serve as a foundation for broader economic inclusion, such as facilitating small business growth and also reducing poverty in areas that have historically lacked access to banking and financial products and services.
So, by having these platforms and being able to fill in these gaps, I assume this is also a boost to the credit landscape in these parts of the world as well.
Exactly. So by certifying users with these alternative data and connecting them to formal financial institutions, these platforms can improve the credit landscape. They enable banks to lend to many previously untapped markets while reducing the risk through better data-driven decision making. And this ultimately creates a virtuous cycle where more people gain access to credit. And as a result, that can fuel entrepreneurship as well as economic development in these underserved regions and areas.
So, what do you think are the most important takeaways from doing this research?
The key takeaway is that digital platforms are transformative. They're transformative intermediaries in addressing these institutional voids. They do more than just provide financial access. They can empower individuals and small businesses particularly in underserved communities that have lacked access to these services. For many policymakers, this highlights the importance of fostering a regulatory environment that can encourage innovation and collaboration between both traditional as well as digital intermediaries. And for researchers, it opens exciting avenues to explore the broader impacts of digital platforms in economic development and financial inclusion.
Valentina, great to talk with you. Thanks very much for your time today.
Thank you so much, Dan. It was a pleasure.
You got it. Valentina Assenova, Assistant Professor of Management here at the Wharton School. Thank you for listening to The Ripple Effect. We hope you found this episode informative and engaging. Don't forget to subscribe and leave us a review so that we can continue to bring you the best insight from the Wharton School.